NBC TV 18, celebrating 15 years of leadership.
Welcome to Taking Stock. This is the show where we take stock of the week gone by and we analyze what to expect in the week to come. I'm Sonia Shenoy and with me is Anuj Singhal. Anuj, what a week it was for the markets. We got that ECB stimulus of 1.1 trillion euros. In any case, we were on a roll post the RBI rate cut from last week. So there was just no looking back.
No looking back, Sonia. One of the best weeks that we've seen in recent times, not for the broader market, mind you. It was a narrow market, but it was a market in which, if you were betting the leaders, you were making a lot of money. Sun Pharma was up some 10% this week. Tata Motors was up 12%. Even Bharti was up 12%. You had Axis Bank up 10%. HDFC up 8%. The Nifty itself was up about 4% or so. The Bank Nifty was up about 4.5%. The only chink in the armor was that the mid-cap and small-cap didn't really perform. But normally in a liquidity-driven rally and after a big correction, normally it happens that large caps actually take the lead. And that's what you've seen. The mid-caps will outperform or will come back in the second stage of the market run. But the first run is still going on. And my sense is that in the expiry week also, maybe it will be about large caps. And then in the month of February, the mid-caps and small caps will take over. But for now, this market is in total control of the bulls. And I think this week was about decimation of the bears. Even the last standing bears, they were taken out.
All right, so let's get Jay Bala into this discussion. Jay Bala of cashthechaos.com joins in. Bala, hi. Thank you for joining us on Taking Stock. It's been a great week for the markets. I mean, 4% higher for the Nifty in the week gone by. For someone who wants to take a fresh long position despite the run-up, would you advise that on Tuesday?
Yeah, thanks for having me on the show. See, the market is actually primed for a 12 to 15% correction. But, this is predicated on the market falling to 8365 from the current levels. So that being the case, someone who's trying to enter the market at this point in time, they got to, be a bit patient and see what the market does, whether it takes out 1800 first or it falls to 8365 first. The market might have dropped to 8365, then it's not an ideal point to enter the market because the cut can get much deeper. But if the market were to take out 1800, I think we are looking at much higher levels, like something like 9300 to 9500 on the Nifty.
Bala, hi. In that case, this 9300 to 9500, do you have any kind of time horizon for this particular mark in terms of the Nifty? Would you say it's coming in the ultra short term, or it's coming in, say, at some point during this year, or maybe even later than that?
Yeah, if it were to take out 1800, I think the move to 9300, 9500 would be fairly quicker. I think we should expect that to happen by March, as early as March, mid-March, end March. So it will be a fairly quick move. But, if it were to drop first, the market has actually, the Friday's high of 8860 odds is actually a very significant resistance. And if the market were to turn from here, I think the correction is going to be much, much deeper than what people are anticipating. So it's a wait and watch. So it's we have the bull-bear divide. 1800 above is bullish, 8365 below is bad.
All right, so 9300 to 9500 is the level that you're looking at. Let's get Nishchal Maheshwari into this discussion and find out whether the fundamentals are supportive as well. Nishchal, hi. Thank you for joining us. It's been a fabulous run for the equity markets. Will you continue to be bullish? And if yes, what does the shopping basket look like now?
So we continue to remain positive on the markets, and the rate sensitives is the main stocks basically where we're looking at. So now we are looking at some of the second-rung private sector banks, housing finance companies, some auto companies, industrials. Cement pack basically looks very interesting from these prices. So I think that's where we are looking for in these 3-4 sectors, and the consumer good also continues to remain okay.
Okay, Mr. Hai, good to have you on the show. So by that, are you implying that the run in the top tier banking and financial names like HDFC, Axis Bank, is that coming to a bit of an end for the near term?
I think somewhere around these levels, some breather should be taken, and that's where we are seeing that some of these stocks basically I think are going over the top for the moment.
Can you just belabor that point a little bit about the second-rung private sector banks? I mean, we've seen stocks like Yes Bank hit new highs every day. What would that list look like?
So something like a Yes Bank, a Federal Bank, a DCB, a South Indian Bank. I think these are 3-4 of the names basically. Again, on the housing finance side, something like a Diwan Housing Finance, we have been liking that stock for a while. Especially the cement pack. Cement pack as a whole is looking very interesting. Ultratech Cement, JK Cement, ACC. I think these are some of the names which we have been telling our clients to buy.
Okay. Apart from that, Nishchal, this week was also about a narrow market. Large caps outperformed and mid caps didn't perform at all, or were underperformers. Do you think that the trend is going to stay for some time, or do you expect a big mid cap outperformance now heading into the budget?
See, what I see is after the rate reversal has happened and yesterday's ECB buying, so you are seeing I think some amount of good ETF buying, and they largely come in the large caps. Again, the FIs also are looking to once again increase their positions, and I think they are also largely focused onto the large caps. At these levels, I see that the domestics have been either consolidating their positions or are taking profits. So you're not seeing a strong rally in the mid caps as yet. But will it shift? I think it's only after the budget I see once again the shift happening.
Okay. There was a mixed bag performance in the auto stocks last week, Nishchal. While Tata Motors has been hitting fresh highs, names like Hero MotoCorp have come under some profit booking. How do you, decide which stocks to put incremental money into, and what are your favorites in that pack?
So I think four-wheelers continue to do pretty well, and that's where we are focused also. I don't see two-wheelers actually doing very large numbers out there, and the growth among the four-wheelers is going to be much stronger. So our top picks there is Maruti and Tata Motors, and followed by Mahindra and Mahindra.
Okay, Jay, just to come back to the earlier point on the Nifty, the related question is what happens to the Bank Nifty now, because that crossed 20,000 and has been a big outperformer over the last 3 months or so.
Yeah, the important resistance for Bank Nifty comes around 20,150, and and it's almost there. And if you recall from a couple of interactions ago, I had said that S Bank and Axis Bank are likely to be the best performers, and SBI from the public sector space. That is typically what has happened, and so this is not much of a surprise, but the speed at which this has come is a bit quicker than anticipated. But again, the momentum for the Bank Nifty along with this new highs is not supporting the new highs. So we could see some sort of a correction come through in the banking sector. So it's better to be a bit more cautious here, take some chips off the table rather than create fresh longs in the banking sector.
All right. Well, talking about key levels, the markets crossed a very important psychological level in the week gone by. The Sensex scaled past that 29,000 mark. But what are the key blue chips that led it there? Nigel has done a bit of analysis, so let's go across to him. Nigel.
Well, it's been a super last 12 trading sessions because the Nifty has gained more than 700 points. The Bank Nifty has put on 1,800 points, and the Sensex, hold your breath, it's up more than 2,000 points. Take a look at some of those Nifty gainers, the big heavyweights over there, HDFC, L&T, Infosys, as well as ICICI Bank. All of them have given you gains in excess of around 10%. Shifting focus, then moving to the defensive names, the best outperforming stock, in fact, this year itself has been Hindustan Unilever. That stock has defied gravity. It's up more than 20%. Add to the list something like an Asian Paints, Wipro, as well as HCL Tech. Then moving to the cement stocks on the back of some price hikes that were seen. Ultratech Cement, the big boy there, stands out. That one has gained roughly around 18%. Ambuja Cement as well as ACC keeping pace, giving you gains in excess of around 13 to 15%. Pharma stocks as well, they have been part of the rally. So Sun Pharma, one of the best performers in the last few years, that's given you gains in excess of around 15%, while Cipla and Dr. Reddy's, they are part of the gainers. The banking and financial stocks that they call for attention, so Axis Bank as well as IDFC, both of them standout performers for you. up on your screen. Other gainers include the likes of Tata Motors. In fact, that one saw a big run on the final day of the week. That one, in fact, has given you 19% returns, while GLF and Tata Power, and both of them, in fact, have given you good gains. On the flip side, though, there have been some losers. So Hero MotoCorp has given you cuts in excess of around 4%, and the metal stocks, they have got a bit of a knock. But the mid-cap space, the party over there is better, in fact. If you just look at it, Shree Cement has gained more than 20%. Kansai and Nerulac as well has given you returns in excess of around 20%, while TV18 Broadcast, that one, in fact, is the owner and producer of the channel that you're watching. That one as well has given you gains of around 20%. HDIL, Max India, all of them giving you big gains. We have some losers, though. Mahindra and Mahindra Financial Services, for the week itself, the stock was down close to around 20%, while Ipca Labs and Petronet, both of them are sitting with cuts of around 10%. But to sum things up, last 12 trading sessions, Nifty up 700 points, bulls fully in control.
Thanks, Nigel. Well, let's take a break on that note. But as we do that, let's hear out some important market opinion. Here's two bullish voices on India, Adrian Mowat and Arvind Sanger. We'll come back and continue our chat with our experts.
This market's performing well, and it's performing well because the fundamentals are improving. We've got a very good policy framework. We've got an excellent news story when it comes to inflation. The final thing we need is a bit of growth, isn't it? And the trend is okay. You know, the IP numbers are gradually rising, but 3.7% is relatively anemic. Generally, this economy is improving, but the absolute level of growth, I don't think, is satisfactory for this stock market to continue to perform well. We don't have a formal target for the Nifty, but we're quite comfortable we're going to get 15% earnings growth. We talked about interest rates falling. I think the environment, particularly at the long end of the curve, is attractive. So if long bond yields come down, you could get a bit of PE re-rating. So that gives you a hint of the sort of type of returns that we expect. And we're looking for an economy to pick up pace. And so we're expecting it to be the more cyclical end. We like the near cyclicals like the financials, but within the financials a focus on the banks that have got a good deposit taking platform.
The Nifty today is at 18, high 18 or 1800s. There's no reason it couldn't be in the 21, 2200, so about a 20% upside by the end of the year. And frankly, it could exceed that if we see one of the things that has been somewhat surprising, which is why I think you could get a bit of a rubber band effect, is that the economic recovery in India has been extremely sluggish for the last 9 months. While we've heard a lot of optimism, but we haven't seen follow through. I think this could be a little bit of those spring-loaded effect, where you could see a very sharp rebound when it starts to get going. And if that happens, then, back end of the year, you could see even bigger moves because the earnings recovery could be much faster than people expect.
CNBC TV18, celebrating 15 years of leadership.